Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news the financial services industry is being shaken up in multiple ways in Australia. But first, the American trade deficit for goods and services narrowed sharply in March as exports increased to a record high. Some see this as a boost for a flagging economy. Rather, it might be customers buying soybeans and other to-be-hit products before tariffs kick in. However, commercial aircraft also contributed to the strong result. More interesting, however, was the sharp drop in imports. Capital goods imports dropped more than consumer goods, but both by much more than was expected. In separate data, durable goods orders levels came in at the expected level. American freight movements are rising fast, and orders for heavy trucks have never been higher. Some major freight haulers are now turning to electric trucks in a big way, some based on hydrogen fuels. Meanwhile, in Canada, they've posted a near record high trade deficit in goods. Both imports and exports were up, but the rise in imports took them to a new record high, driven primarily by vehicle imports. Yesterday we reported a sharp slowdown in air freight growth. Today the passenger traffic level data was released, showing a rising rate of growth, up 9.5% from the same month in 2017. The international component, which is approaching two-thirds of all travel, was up by a remarkable 10.6%. The Asia-Pacific part was up by 11.6%. The world is on the move, it seems. In Switzerland, they are having a referendum vote on a new idea on how money is to be created in the country. The vote is due on June 11, that's New Zealand time. Their central bank is warning of the economic dangers if the idea is voted in. There are no new polls indicating support or otherwise yet, but the Swiss franc is at its weakest point for the year and near that since 2015. If voted in, it will certainly sideline their currency. A week ago, we reported that Argentina had hiked its official interest rates by 3% to 30.25%. Today, they did it again, taking the official rate to 33.25%. They're getting serious in tackling their 25% inflation rate. Their central bank said today they may even have to raise rates even further. In Australia, their series of official inquiries and investigations has generated a remarkable demand for lawyers, and that is spilling over into normal commercial life with the availability drought and a cost spike. And a new law will require their regulator ASIC to recover its cost of operations by charging individual financial advisors for their regulation and enforcement activities. It seems likely that this will price independent advice out of the reach of most, and dependent advice channels are likely to wither as well, even if some major ones absorb the cost. Free advice will only be offered by the big brand, that's bank channels. In the end, honest advisors will pay for the costs of weeding out the dishonest ones. The Aussie financial advice sector is likely to change dramatically, and some of it in unintended ways. The US Treasury 10-year yield is now at 2.95%, that's down 2 basis points from this time yesterday. The Chinese 10-year is at 3.67%, down 1 basis point, while the equivalent New Zealand one is at 2.83%, also down 1 basis point. Gold is at $1,314 an ounce in New York today, that's up $7. Oil prices are up again, now at just under $68.50 a barrel in the US, while the Brent benchmark is just over $73.50 a barrel. And the Kiwi dollar is a little higher this morning at 70.4 US cents. On the cross rates, we're up to 93.5 Aussie cents and 58.7 euro cents. That puts the TWI at 72.9 and almost exactly where it was at the start of the week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.